Okay, testing. Welcome to the stream, I guess, and I'll just get started. So, I decided to take the day off from trading today just because I saw that there's a bunch of news. I'm just going to refresh it and probably show what kind of news there was. Let's go to today and just filter that off for high impact news. I guess the results weren't posted for this one yet, but looks like there's some slight changes. Like, actually, I guess this one's more substantial. This one's pretty dead on. So this one, not too impactful. This one, probably pretty impactful. And is it reflected on the chart right now? Yes, it is reflecting on the chart. So right at 10 a.m. starts to crash, right inside the macro time there. So I like to use macro times because I like to know when volatility is going to start kicking in. That way I'm not caught up in surprise, but it's pretty unnecessary. I would say it's not something that you really need to look out for, but it can be helpful. It can be helpful. I'm just going to start from the beginning of how I trade. So let's just go here. I like to draw a fib just on the on basically all the major time frames because it helps me understand what my current range is. So on the monthly, I'm looking for buys, and if you manage to get a buy that aligns with this and this, if these two line up closely enough, then perhaps you can go all the way there. Or if you're just trying to break this low, which it's possible that it could because these lows look fairly soft, then you can take sells from inside here and then just go all the way down. From the weekly range, from here to here, I guess you could also argue that you could go to here, but this is all still a continuous range because this is a high that leads to the current low. But if you want to take it from here or here, then it's up to you, no problem. Daily range, put something a little bit closer because in relation to the hourly levels, it's a little bit easier to monitor. The only thing I really keep in mind is, let's say you have this is from this point to this point. Oh, well, to this point. This is your independent leg. Like, this is the leg that took out both sides. So now this could be your range. That's really my only rule of thumb. Is as long as you pick that one, then it's not really wrong. So like for example, this one took out here and low, but it decided to just continue it as like a main push. But again, here we had some candles here, and then it broke higher, and then it went lower. So from here to here is a push. It can be on any time frame, doesn't really matter. If you want a rule of thumb, make that your higher time frame push, and then if you're using it for an entry, then make sure that it actually signals the change of character or market structure shift that you want it to. And we'll go over that in a bit as well, I guess. So I'm just going to start from scratch, and then you'll really get a demonstration. So let's just go here, do that. Okay. I mean, I'll go with this one. I'll go with this one. Those two are pretty aligned. Let's go down to the 4 hour. Now, if I'm trying to be like really specific, I would just put, just trade this push. This all looks like a retracement, really. Like, it's too trend liney to be liquid, but I guess, well, it's going to turn into liquidity, I should say. So if I was really going to pick a push out of here, then, I don't know. I'll mark it out anyways, I guess. But I don't really love trading based off of this trendliney type of structure because it usually turns into liquidity. But here to here, it's logical, and as long as I have a general sense of balance, then I know whether to buy or sell. And for the hourly, I guess I'll just mark up this current range. I'm using Alt F, by the way, for these fibs, in case you don't know the short key for it. So this is my 1 hour push, and then really the only thing to keep in mind is if you're just above the midline, then you sell, and if you're below it, then you buy. And then make sure that the fib range that you're looking at, or like the premium discount range that you're looking at, is this low. You used to take something out and then create a new high. That's how you actually have a stable push. You don't need to go all the way to the monthly because it's not going to affect you if you're a scalper, but I like to do it because it gives me a wider perspective, and then I can understand how long I can be in the trade for, whether I want it to be a very short trade or if I think that it has swing potential. Because sometimes, once in a while, you get these really good entries where you can get a scalp entry and a swing target. So you just really maximize your risk reward. When you're aware of the higher time frame, sometimes you can double or triple your trade for free without doing anything extra. So that's why I at least like to look at it one time so I can understand what sort of setups I'm looking for, and then just write that in a piece of paper. So yesterday I got into some buys and sells. I wasn't looking at EU yesterday. Well, I mean, I was for a bit, but then I got into some gold sells, which looks sort of similar. And I saw that there was this gap here. So my overall goal was I wanted to try and sell into the gap. I kind of missed it though. Well, not kind of, I completely missed it because I was pretty distracted. But what I was looking at was it broke above Asia high, and then it started to give this little engulfing candle, this internal break of structure. There wasn't really an imbalance, like there wasn't really a fair value gap or anything, but I guess it filled instantly. It didn't leave one, but I figured that this would be a good supply zone, and then there could be also a refinement inside that if it managed to tap. So if we look at it, let's say that this to the low is my general supply zone, and this ends up working for the most part. And then from here to like here, the opposite side candle, this was my refinement. And so I was looking to see if it would ever break this high and go higher, but retrospectively, it doesn't necessarily need to because this already filled. So this is probably the last point where it would be efficient to look at, and then this one just works. So very close. So yeah, in retrospect, that might have just been it, but didn't really get to that point. Instead, it just goes all the way to this point at the bottom, breaks internal structure, and then one of the optimal entries would probably be about here. So something like that, maybe give it like a little pipette or something just for spreads or margin of error, because I've had it where it's just like right here, like right at the top high of the candle, and it's tapped me out, and then it moves perfectly, and that's really annoying. And then targets, you can target this low and try and break it. You can target the imbalance. You can target these lows because this all looks very soft. So like stuff like that. If you ever see trend lines and you're already starting to move against them, it's usually a safe bet to try and break them. So this one we're maxed here at 8 to 1, and for the day I was targeting the gap. So if I managed to get into the gap and then tap the previous day's high and low, that would have been a 15. Over here that would have been a 20. So I missed a really good opportunity to sell right there, and it also would have scared the crap out of me because during New York it manipulated back up and then went all the way down. So yeah, there's a little bit of news happening at this time, but still would have held, except if you want to break even, then assuming the spreads weren't too high over here, then you would have still been in the trade even at break even. So it was an interesting missed opportunity. And over here, I caught this buy from this point, so just used this as my point of interest, and then stops at the low, and then targeted the supply zone. And this was a pretty good trade. This one, I closed at about 4.5 because I started to see all this, and then I had like 2 trades prior to this where I was floating 3 or 4 to 1, and then it just completely reversed on me. So, you know, for me to get 3 of those in a night, I thought I might as well just like on the 3rd one partial out at 3 to 1, and then let the rest run till 4 or 5, and then not get too greedy. So in total, I closed about 4% off of that trade, and I'll take it. So pretty simple price action, and then you can sell all the way along here. Instead, I decided to sleep because it was still very early for me in the morning. Not trying to pull all-nighters all the time. And then once this happens, I don't like entering when, well, one, there's news. But then also if there's no structure to play around, it can be a little difficult sometimes. But there is one type of setup where that is doable. So normally what you'd want to look for is something more like this, or perhaps like this, where you have a push and then it starts to tap back into the point of origin. So over here, like this is where it originated from, so it's a mean reversion type of strategy. So it goes back to an average point or something, and then it continues the trend. So like this is one of the more stable setups, and it's been popular for years. And then another one is the breakout setup. So if you get some bottoms that are aligned, then you can technically trade from here to here if it stops at the recent high. So let's say, like, I mean, this isn't a perfect example, but something like this. If you're trying to be a breakout trader, then watch it, do the liquidity grab, and then you just enter off of this point with momentum. And it's not a clean trade, but unfortunately it works like reasonably well. Like like you might not want to hold this whole time because if you're entering like this, you're probably a psychopath. But that type of setup does work, and sometimes you can steal like 3 to 1, 4 to 1, 5 to 1 off the market from doing that. Um, like for example, like if you wanted to do that here, then it's also possible. Um, so here we managed to take out the low, right? And then it goes higher again. So we managed to take out these recent highs. And then now we have the breakout setup. So now you can technically enter like this, but I don't like to enter right away off of that. Like if you want to be more secure in what you're doing here, watch it break out, but then expect it to pull back as soon as it breaks out, and then change direction again. So it breaks out, and then instead of being in drawdown or potentially losing, I'll wait for it to recover instead of being an idiot. So instead of just trying to move with the momentum of the falling knife, wait for it to pull back a bit. And even over here, you get like a little bit of a pullback that you can enter off of, or right here. And now you have a smaller stop loss as well. I'm kind of curious, like, let's say we got in like a little bit later, like we got in like right, like as soon as this like starts pulling back, let's get in like right here, it stops at the high. That stop's not as good as I thought, but risk reward wise, what are we looking at from the bottom? Yeah, so it actually improves the risk reward by tightening the stop loss. So even though you got in at a later point, your trade is just more efficient. So it's like almost 10 to 1 just by reducing the stop. So that's why I like to wait for it to pull back before I like actually start to enter if I'm doing that type of setup. I actually think that it's one of the easiest setups to find. You're not confused at any point. Like let's say you're over here and then you're just thinking like, oh man, is it like gonna reach all the way to the top? And then you don't really know until you're all the way up here, because like now you're starting to take out all these structures. Waiting for the pullback over here can feel a lot easier. So like let's say that you're unsure of the trade up to this point. Now it pulls back. Okay, here you probably get a little bit effed up. If you put your stops here, then you're probably going to lose. But then you go over here, and then you notice this goes in, and then enter off of there. Get yourself a nice clean trade. There's a lot of different ways to apply a breakout strategy pattern. So just find what works for you. Let's also talk about time for a little bit. So with time, let's say, there are times when there is volatility, when there's volatility in the market. So, for example, session openings, London, New York, Asia session. The session timings in the first hour or first 2 hours, there is increased volatility. So there's more traders, and with more traders means more volume and a sudden influx of volume. But there's also something called macro times, which is times that are actively traded by institutional robots. So basically all those algo traders, and they inject volatility into the market during fairly predictable times of the day. And so that's why I have the macro indicator on, so that way I know when I'm about to enter into a volatile time of the day. And if you're familiar with the Asia range strategy or the Asia box strategy, I'll just demonstrate. So this purple range is Asia range, and this is the high, low, and middle. I like to call this, well, this is called Asia Box, but when I look at ICT macros, um, you'll notice it's got a high, low, and a mid-range. And that means that I can apply it in the same way that I'd be trading Asia range. So if I'm looking at a break through Asia range and then it bounces back up, then I could potentially sell from here. Or if I'm trying to trade back through it, then I could see, okay, did it sweep? No, it didn't sweep. It didn't give me a gap back up. Okay, maybe I can try and continue the sell trend for a little bit, and then, oh, did it touch the point of interest? Just barely. Like if you manage to get into the sell, then you could probably get into here, but then this all becomes liquid. So it's really just like it gives me extra little visual cues about what's happening on the chart, because sometimes you're looking at the chart and it's just chaotic and you're not exactly sure what's going on. Like you're not sure how to stitch together different pieces of information, because all that trading is a visual representation of price and time, or price over time. So because it's graphical, it makes the information easier to instantly digest. Over here looks like there's an expansion, so we're probably going down for the day. Where would it go to? If it goes inside here, fills this gap, I wouldn't be surprised before it goes down. So let's go like here to here. Let's say that there's this range. I'm about to enter into another macro time in 20 minutes, so I'll probably fill this, and then I'm not sure if it'll stop here, but generally it will fill imbalances. There's also a lot of buying candles inside here, which is curious. So would this ever act as like a breaker inside here? I would need to, I'd be curious to watch it. I don't see an entry that I would normally take. Let's see. So this is also interesting because this looked like a gap on the 5, but on the 1 it is actually just, well, it's actually a candle. So that kind of changes my opinion of what the zone would look like. So like I usually take this candle, like the opposite colored candle inside of the push. So it's like this one is the buy candle that led to a bunch of sells. So that's what I'd look for. And when you're looking at this chart and you think it's messy, I mean, you can just turn it off. You can just go like this, and you can go even like this, and then trade based off of that. It is cleaner, and I like it as well. I think here is also interesting because we have the internal breaks of structure coming back up, and then it breaks down. I think this one would be surprisingly resilient, even though it looks like it's trendline liquidity, just because it's been breaking down. It would take a lot to bust through this and this, so unless it has something like, I don't know, just as an example, like some sort of build-up, it takes a little bit longer. And so that's how I have this principle of being able to time the market to a certain degree, at least intraday. It takes time to change character and to break through things. The market is fairly predictable that way. Like it doesn't just break through every single major level with ease. It takes time to build up to it. So like even here, right? It looks like trendline liquidity, and it takes a while to actually break through it. Like what do they have to do? Oh, okay, I spent a trendline liquidity. Like, is it going to do it right away? Maybe, maybe not. Um, like here, it gets to some of it, and then it breaks high, and then it breaks way higher, and then it has to do like a whole shift, and then it decides to break uh, like more trendline liquidity, and then it didn't even enter into like okay, it barely entered into this little POI over here and into the imbalance. That actually would have been a pretty sweet entry if you got into that. So like change of character takes time, and this is like several hours, or like let's say spot the trend line liquidity from here to here, it's about an hour. So if you're trying to spot a major change, sometimes like you see something in London and it doesn't happen until New York. Um, that's just sort of how the market is. Like it takes a lot of time for the market to change direction. It doesn't do it on a dime unless there's news. And then even in that case, it's usually a quick spike up and down. So yeah, I don't really have a structured lesson for today, but this is reacting fairly predictably. So um, yeah, I don't think that it's a complete sell off from this point, but it is respecting. Like I don't see an entry except for maybe a risk entry where you enter it and then you just enter knowing that there's a higher chance of losing here. Um, so let's say that I am going into a session. What am I going to look at? Well, one, I'm going to give it like a quick 1 hour view, just so I understand what I'm trading for the day. So, actually that's not true. I would go to the 1 day first, and then I like to mark out previous day's high and low. So let's just go here. This is the previous day's high. I don't have a template for that right anymore. Okay, so let's just go here. Let's make that blue. Okay, and I like to do this just so that I know what I'm trading in relation to. And you'll also notice it's basically the same as everything, like the fibs, it's the same as the Asia range, the same as macro time. So I like to call the strategy the box. If it trades above the box, like let's just draw a box real quick. So there's only two things that it can do, right? It can trade back into the box, or it can trade, or it can start to bounce outside of the box, like it usually does this, but like maybe it, let's say it starts from like here. So it really only does one of those two things. If it trades internally, it gives a whole other indication. Like now we can just use this as our daily range. So like, let's say that we have that we're stuck inside the box here. Now we can just use this as our range and then just try and go high or low. So even if it stays inside of the previous candle, we can still use this as an internal range. But for the most part, it will break one side or the other, and then that'll give us an entry. So over here, for example, previous day's low gets swept, and then it trades back into the range. Almost certainly able to find some sort of an entry over here. Yeah, so here, I mean, even over here, like you can get into these trades, like why not? Like let's say that you see it sweep, goes back into the range. See the imbalance here, you see this point of interest here. I'm sure that you can make something work here, even if it's not the cleanest type of setups. Like even over here, if you gave this a shot, like you could probably get that. Even if it goes break even, you probably don't feel that bad because it worked at least for the first tap. And then over here, really just wants to sweep, go back up, and then you get a nice similar entry right here. And then this one is ultimately the one that did work. So you can't know these things in advance, but you can know the patterns of what it looks like to reverse. So it's like you can give this a shot. You can technically even give this a shot, right? Like this is a pretty fair shot right here. Like just taking it off of this low, like, and then going over here. If you held too long, then obviously some just a loss, especially if you're not trading it with if you're trading it with this type of stop loss where it's like just massive, and what to hit 1-to-1 is right here. So unless you're a 1-to-1 trader, you're probably going to be taking this L unless you, or you just go break even really early, and then yeah. And then over here we do start to see that there's the pattern forming. Here I guess like maybe there's not enough trendline liquidity to take out, but here we see the same sort of pattern. There's a lot of buildup, and then it starts to change character, and then it dips back into it. So it's possible to take a couple L's inside here, and then get the actual change over here, and look what happens. Like, oh, like it breaks the previous day's low, it starts to sweep it, and then it starts to go back up. It also enters into this little 4-hour candle, which is also a nice actual, it's actually a nice little confirmation of zones. So, go to 60, yeah, it dips into here, and then we can refine it. From here it breaks the lows, so I'm just going to refine it to there. I still suspect that from here to here is also some sort of a zone, but unless I get visual confirmation, then I don't really want to mess with that. Here, I mean, it has an imbalance that it's like slightly filled, and then literally the next candle is the gap up. So I would just take this as a broad zone to monitor. If you really wanted to refine it, then just go to like the high, I suppose. But for practical reasons, I would probably just go up to this high, and then just monitor what happens, because it's a little bit choppy up in there up to this point. So yeah, I would still go up to this high, even up to this high, just because this push is what led here. But if you wanted to put it up here, then that's also very reasonable. You want to build a margin of error into your trading. You don't need to be like you want to be as precise as possible, but you also want to leave yourself room to be wrong, because to enter at any time of the market is to be willing to lose. And if you give yourself less opportunities to lose, then that's good. And it also opens up more opportunities to be correct. So let's say that you weren't completely sure, and even if you entered like all the way up here and you put your stops down here, you're probably safe. If you enter over here, it works out now, but there are situations where you don't manage to get into the trade at all. So, is there an example in recent history? Like over here, let's say you wrote this, you made this as a zone, right? Like you went all the way over here, and then it misses. So it's not like a perfect example, but there are times where you mark out a zone and it's too tight, and you either miss the trade or you end up losing because you're a little bit too greedy with your approach. So I like to find medium risk, medium reward as a harmonious little balance. So, especially if you're just monitoring the zone, you don't really need to over refine up to that point. Just make it as a zone where you're looking at, and you don't necessarily need to enter off of that. Unless you're a swing trader, then you could probably take that whole zone. But if you're trying to be precise and you're just trying to scalp it, oh, okay, so, I mean, I guess like I was talking about, it worked out pretty well. Yeah, I don't know if this holds up entirely, but we're already starting to go here. Let's make this as equal lows. So, my best guess would be we're going to go into this area or this area, but from here especially, it looks like it's probably going to start to get choppy. Like, even if it breaks the low, I don't know, I expect it to get choppier around this area, just because this is the point of origin. So, like, right around here is where I imagine it gets choppy. So, like, it's buying now, but I expect it to go a little bit more haywire, like here, like just all over the place. Maybe not exactly, like definitely not exactly this, but it has to make a decision. If it does crash through, then that means that there's a lot of orders, and I would expect it to just crash all the way through. So just that. So if it does crash, then I expect it to be aggressive, but otherwise we should start to see a choppier range start to form, because it's entering a major level. The way I determine a major level, by the way, is really just is it a high or a low that is the very bottom of the push. So we have a push that is here to here. So it's the very low of the push, and it very rarely breaks the bottom without some resistance. Like, it usually bounces off a little bit and then presents an entry. So you'll always get a second chance. If you still think that it's going to break this low, then you still have a second chance. So like, even if we entered off this, you don't need to go stops to the top yet, just because even though there's an imbalance here, it led to the structure. There's still like 3 points of interest over here that you could enter off of, and it wouldn't make sense for it to break all the way through right away. Let's just see if this would make sense on the 5. Over here, a little less clear. Over here, it looks like we're more or less trading off of the 3. I'm just going to check a couple of time frames just to confirm, but yeah. Yeah, it's a little unclear on the time frames, but if you wanted to enter here, stops to this high, it kind of makes sense to me. Will there be a buy here? There could be a bias here, like it entered up with some speed. I don't love the way it's turning as well. Would ever break these highs? I mean, it could still lose, but I like the odds of this one trying to break the lows and trying to enter into the imbalance here. So I don't know what my, first of all, I hate the stop loss. It's like a 3.4. Usually you try and get that to like a 2. And the risk reward, like, what's our target? Like, let's say we're trying to get a 3, it's about there. It's pretty reasonable, actually. Like, just trying to get into this imbalance here, just like the edge of the imbalance. Oh shoot, moved it. So we're trying to get to like a 3. That's like entering into the imbalance from here. Sounds kind of reasonable. Can we get more than that from here? Maybe not. Um, yeah, I don't know. It was just it's an interesting thought, but hmm, trying to see if this entry would make sense at all, because over here, and we are breaking low. Let's bring over here. There's something. Yeah, looks like you're just losing, and then here is perhaps a better zone. So, yeah, this one's just losing. Yeah, I had a feeling as soon as I put it on the chart that it was not doing what I had hoped. Because if it sits around here too much without bouncing off cleanly, then it's probably going to lose. So this one will just be a loss. And then it enters into the zone again. And just watching it. But yeah, like as you can see, for the most part, you can find some pretty textbook setups, some pretty easy setups just by treating everything like Asian range. And win rates generally pretty good. Oh, interesting. So here could have been an interesting buy, it turns out, in retrospect. Huh. Now, does it ever break these highs? Like, maybe not right away, but like eventually? Like, it still has to get through here and here. So, So the way I like to think about this is, can it break through here? It's almost like there's two bodyguards blocking the entrance. You need a pretty strong intruder in order to get through both bodyguards. So it's like this is the front line, and then these guys are like posted up in the back. They're like sitting in the lounge. So like you got like the big tough guy over here, and then there's like the scrawny guys over here. So yeah. Yeah, I don't know. Don't really have a lot else to talk about since I'm not answering any questions in particular. I didn't really have slides prepared or anything like that, and there's no one is actually watching this, so I don't have anyone asking questions. So sort of out of material. Yeah. Swept Asia high, came up, and then now this becomes our supply zone off of here. And here is really just imbalanced, so it's going to get filled, and it's probably going to get broken, and it's offering little resistance. So I would say that here is a more classic way of looking at supply and demand zones, just like the opposite colored candles before the push. But here there are pushes. So let me just go here. So like right here. So yeah, this would be a little bit more of a. I am curious because there are, like, even though it's this here to here, there's still a buy here, so I would want to look to find that. Yeah, so it's like the 2-minute candle. From here to here, we start to get a fairly balanced range, and then this is when it actually starts to change. And if we have this breaking low, breaking high, goes over here, then you can definitely make an argument for a bullish push. Another thing I like to do is look at change percentage. So right now we're flat, so that gives me no real indication, but GU is positive, so that gives me some indication that because they're correlated pairs with the USD, and the Euro and GBP are closely related because they're both in Europe, even if UK is not part of the United Kingdom anymore, it's still in Europe. So if we get this, then it's also probably fair to say that there could be a buy if it gives it another tap. Goes in, breaks breaks the internal structures, taps in, goes over here, still respecting this, and then if it goes down here, it's technically triple bottoming and then creating equal lows, but usually in those cases it's fairly secure in order to buy, and it's also similar to other entry models as well. WWA, Asia sweep type of strategies is similar to ICT models, is similar to a lot of liquidity inducement theory trading models. Basically the setup is a range is created, there's a little bit of an accumulation, and then it breaks out and then it comes back to where it started from. It's just a very common setup. So I'll keep watching the charts for a bit, but yeah, I'll just chill out for a second over here. So it's starting to slow down a little bit as soon as it enters into the zone. And as soon as I say that, it literally pushes up with an aggressive candle, so it's fascinating. Gets through bodyguard number 1 like he's Swiss cheese, you know, cutting right through him. A lot of holes in his defense, I suppose. Okay, now it's cutting through with very little resistance, so now I suspect this could happen. And then another thing I would expect is as soon as it breaks through here, then quick pullback, and then it would be the same type of breakout entry model, where it's sort of like here, and then it pulls back, and then it gives you a chance to enter, almost like a cup and bowl. So that's something I'd look out for. But I think I'm going to end stream for today, and yeah, see ya.